There is a home builder ETF, right? XHB, right? And Taljit, do you know about a leverage one for this?
I don't think there is.
No, I do not.
Because that will be interesting, because when we see the whole group, or at least the ones that have I think more than 5 stocks in a team or a group, then an ETF is even more relevant. And it's not that far away. I mean, the ETF is just a gap up today. Yesterday could have been a good day to buy it. See, the moving averages are turning up, and they're just about to cross the 10-21 above the 50-day. And we're
Excuse
just
me.
about.
How about nail? Since you asked for a leveraged one, but I do believe the volume's pretty low on it.
Nail. Oh yeah, that's that leverage one, right? Home builder. Thank you.
Oh, yes.
Yeah, that's a good one. It's a little bit extended, but they are. I mean, it's this thing continues. Let's look at the weekly. Looks like a cup forming. Yeah, the volume is not as high as the other ones, but
Be too easily manipulated.
yeah. So it's good to know what are the underlying stocks in it. But yeah, this is a good team, one to watch. Sister trades are companies like Zillow, for example. They don't have the earnings in prior quarters, but if we see 2024, they're supposed to grow 90%. Return on equity is low. So it's a cup with a short handle. It's not complete. But you know, it's good to see that, for example, today is a down day. We have 3 red days. Volume is really quiet. Today was higher volume, but practically very close to the prior day. So holding the 10-day exponential moving average, and they crossed a few weeks ago. So they're right now out of the stack in the proper order. 200 days also turning up. Relative trend line isn't that big, but if the home market catches up and we get better estimates, it's an interesting play. But you know, it's really far from the all-time highs, but it's turning around. The Flora and Decor is the other one that you mentioned today. Cup with handle, broke out already prior week, and moving up to this week, but volume is lower. We're in the middle of the week. But volume today was really good. It's only 1% from the pivot. So I think this one is still actionable today. I mean, how it closed today. And really good, looking good. So that's in the home construction team. Then in the software area, I'm looking at HubSpot. We have a bottoming base. It's a flat base, broke out, and then we have some inside weeks, and we're holding there. So it's did a couple checkouts up to the below the 21 EMA, getting closer to the 50-day. So you can, this might be like a tiny cup with a handle. It has some double bottom spirit to it. It's obviously a small base, but this is good. I mean, it has some checkouts. Volume is drying up. You can consider this like a tiny handle. It might need a few more days sideways, and but in the software area, in this group, computer software enterprise, let's see, we have AIS as one of the leading ones. It's still trading below the IPO price. So market space shows up this one because the relative strength in the prior months have been really strong. I mean, going from $6 all the way to 15, double already, but has a lot of overhead supply. AI, there was in significant volume breakout a few weeks ago. This is what is called a liquidity signal. When the stock like this starts to trade with higher liquidity than what it had traded during the IPO week. So that's something to pay attention. It was flagging, had a failed breakout with some short-term report. It's still, even though it had this failed breakout, it's a very wide price action. So minus 26% in one day, that's a lot. The next day it came down 15% more. It's a deep 35% base. It's still holding the low of the base. It's trading above 20, which is interesting. Obviously, this is not viable for any canceling rules, but I want to keep watching. DV, double verify. This is an interesting one that does the advertisement. And IPO price was 27. It took some time for it to break out above it. You have some secondary offerings that brought the stock price down, but this was a bottoming base, and it's right there near the pivot. So it's flagging here to have this downtrend line over the highs. So maybe a few more days and breaks out, or does a shakeout and then breaks out. Petty is the one that Keith mentioned. I think competes with this one. It's leading much better. So I have this downtrend line where we noticed it in a few weeks ago. Came down, did a shakeout, and then it has not looked back. So it's completely finding support of the 21 EMA and the 10 EMA. Today it's an inside day. So this is constructive. I think tomorrow, if you're a very aggressive swing trader, maybe you can use yesterday's low, or you size your position using this low to that's about 8%, 10%. I don't have a precise measurement here right now, but it's if you expect this to continue from here, that's being aggressive. But DV, then we have, this is one that got up my radar because it showed up with this very high volume last week. Obviously, this is a SPAC. The symbol has the AI letters, so obviously it's out of Palo Alto, California. Develops software as a service-based mobile application for workplace experience to employees. So the merger happened. They got this massive volume, 163 million shares, move up 300% in one day. Next day moved 94%, then gave back a lot. And today also gave back 18%. So it's very wild. These SPACs are crazy to trade. There are very few mutual funds, many of them sold, obviously, when you have a big decline like this. But somebody's buying back, so something is happening with it. I don't know if it's just because it has the AI name there. PagerDuty is another software company. It's not they have been in business for a while, but has a good canceling numbers. You can see acceleration in the earnings, and more than 30% in the sales. So consistently selling. We have a good relative strength line, but it still have some overhead supply, so it's one to watch. Duolingo, that does the language learning software. So also have a liquidity signal a few weeks ago, like in March, and it started trading back above the IPO price. And it's finding resistance at the IPO first week close. So that's that red line that I put there. So it closed above it, and by the end of March, and now it's pulling back, and it's testing the price level there. So it's holding up there. Spotify is another one in this group, the music service. It's going back to its IPO price. That's the blue line. It's finding some resistance there, but have been seeing good volume. So move from the low have been 70%, and you see the moving average is stacking up in the right direction. DT, the Dynatrace, IPO in 2019, top up $80, have a massive decline with the bear market, more than 60% maybe. But in this recent earnings report, start seeing again a big blue volume week, 9 million shares on that week, move up 23%, and then corrected, gave all back, and if we look at the daily, it's obviously when a stock have a massive decline like this, will correct after finding higher prices, but it's making higher lows. One to watch because it had decent kind of slim numbers for earnings and sales. If we look at the sponsorship, we still have some IBD preferred mutual funds, and the number of funds have been coming back above the high numbers that we have in December 2021 to 1143 funds. Shopify, another one of the growth stocks that have a massive run in 2022. I mean, in 2020 up to and top in 2021 and 2022 they decline, and it looks like they're made a low and now they're starting to build back. This could be a potential bottoming base or subsequent base that is forming. Earnings in this quarter, you can see, was minus 50% and 26% growth, sales growth. But if you look for the estimates for 2024, it's going to be up 423%. So something to start watching. That in the software group, we're seeing that many of these stocks put below. The one that is leading the group is this one, Azure Software. Broke out on a flat base. They have a very good prior uptrend. You can see that from $4 to $14. That's 181%. Flat base that was deep, only 12%. Broke out already, and it's waiting for nobody. Every day goes up. IoT is another one that is in the software group. Have a big decline. It IPO in 2021, IPO $23. It came all the way down, formed a bottoming base, volume dried up. Then you start seeing these big blue bars, liquidity signal with the prior earnings report, and now form a base, and it broke out again. It was so these are short bases, 27 days. So it's it's like 5 weeks. They're deep for being considered a flat base. Well, maybe they can, but it's there is no handle here. So these stocks are they break out, and I mean, buying here, they can easily pull back to the moving average. I need to wait for a handle. Fastly is another old one. It's also have a massive run back in 2020, came all the way down, is below the IPO price. The IPO price was $16, and it closed above it, but it's fighting resistance there. So things that these stocks are making their low, so I think that's a good sign for growth. Cloudflare is another one. Symbol NET have a massive decline, and now it's putting a bottoming base. You can see the wall of blue, as they call, of 5 weeks up, with a increasing volume every week. It reported earnings, and obviously there will be some profit taking and a new basis formed. I have a downtrend line here, so it's 42 days. You have a very good shakeout on the low of base, which is positive. And last week he had this interesting move, and the moving averages are now stacking the proper order, and forming this little shelf. Handle needs maybe one more day to be a proper handle, or pull back a little more to the moving average and form the right side of the base. So another one good to watch. IoT already talked about it. Azure already talked about it. And last one I have, I think, is Snow. It's a very large market cap and liquidity. It's not acting as well as the others. The relative trend line has been downtrending, but it's one I'm watching just in case it starts to behave like the other ones. And so since that it made this low back in early January, it had a good move of 43% and gave back almost everything, but it's making a higher low after the earnings report. So trying to move back above the 200 days. So see here, the volume was 50% above average, then had a selling day, another high volume at the beginning of the month. So you have at the end of the month, they bought some, start of the month, somebody sold, and they bought more, pulled back. This is an interesting price action because it's a red down day, came down 5.81% in a very high volume, but it didn't make a new low. This is a higher low than the prior weeks. So I think it's constructive, and then you have blue days. So funds may be buying this, supporting this. The up-down volume ratio is 0.9. It's not perfect, but it's showing some signs of potential accumulation. Accumulation distribution is C+. And the fund numbers keep increasing. And we have Fidelity Contra Fund, which is one of the preferred IBD mutual funds, increasing their position. They were out in December 22. And so it's one to watch, definitely, because of the liquidity and the potential that it has, because we see the earnings per share for so I think that I don't know about their calendar. When they have for this year, they might be their year 24 for them, and next year will be 25, and they have a growth of 71%. R&D is 38.2%. They're still not profitable in the current quarters, but the estimates for next year seem to be good. So it's one interesting to watch. So, well, that's about it. Those are the stocks I'm looking at, and wanted to share with you what I'm seeing. Any questions?
An observation for the good of the group. Kramer has a segment on his program that started where he's talking about IPOs and the ones that are beating their IPO price going back to 2021. And, you know, he mentioned 5 today, and he's going to continue that for the rest of the week. So if anybody is interested, it's towards the end of the program, close to about 10 minutes to 7. You might want to check on it. Thank you, Francisco. As usual, you know, I don't know whether we saved the best for last, but we certainly went through more